This section of the chart provides a clear example of how the market moves through multiple phases of liquidity competition between buyers and sellers. At the beginning of the period, the uptrend starts losing support. The cloud warns that even relatively small amounts of volume are beginning to generate noticeable price reactions. This is one of the first signs that the quality of the rally is starting to deteriorate. At nearly the same time, purple traps appear above the market. Buyers continue applying pressure, but price responds far less than expected. The market begins absorbing volume without generating meaningful continuation. After a correction, the situation starts to change. Purple traps below the market tell the opposite story. Sellers attempt to extend the decline, but the market shows little willingness to follow through. Additional selling pressure produces increasingly limited results. Then the first downside discharge appears. During the decline, the market receives a large volume liquidity test against the prevailing direction. The attempt to extend the sell-off fails to gain confirmation. The market absorbs the volume and transitions into a powerful recovery. Following the strong rally, blue traps begin appearing on both sides of the market. This reflects growing disagreement among participants. Sharp attempts emerge from both buyers and sellers, yet neither side is able to establish lasting control. A downside liquidity test is followed by an upside discharge. The market receives a large volume liquidity test against the ongoing uptrend. Such tests help reveal whether current demand is strong enough to support further upside continuation. Shortly afterward, the first bearish collapse map appears. This is not a reversal signal. It is an early warning that the structure of the rally is beginning to lose stability. The trend is still advancing, but the quality of the move is gradually deteriorating. Later, the market conducts another liquidity test through a downside discharge. Despite increased activity, buyers continue to maintain control. However, a second bearish collapse map soon follows. This repeated warning suggests that the rally is becoming increasingly vulnerable. Buyers require progressively more liquidity to sustain the advance. Next, a purple trap appears above the market. Despite continued buying interest, price becomes less responsive to additional attempts to push higher. The sequence is completed by another cloud above the market. Once again, the market shows signs of weakening support before any major correction becomes visible in price. A sharp decline follows. Near the lows, blue traps begin appearing on both sides of the market. This is another sign of participant disagreement. The market becomes increasingly unstable, with sharp attempts to move price both higher and lower. The next downside discharge once again tests liquidity against the prevailing downtrend. The market receives another large volume test. The response suggests that sellers are gradually losing the ability to extend the decline. Additional confirmation comes from purple traps below the market. Sellers continue pressing lower, but each attempt generates less impact than the one before. A bullish collapse map then appears. The market begins showing the first signs that the bearish phase may be approaching exhaustion. A cloud forms below the market shortly afterward. This represents another liquidity test, this time with reduced volume. The market demonstrates an ability to hold new lows without expanding the decline. A second bullish collapse map follows, confirming weakening seller control and a gradual shift of initiative toward buyers. As a new rally develops, purple traps appear above the market once again. Price continues making new highs, yet more volume begins to be absorbed without producing proportional acceleration. At this stage, market participants are waiting for the FOMC rate decision. Uncertainty remains elevated and buyers become increasingly cautious ahead of the announcement. Once the news is released, the market enters an explosive advance. The most interesting signal appears later. An upside discharge forms directly in the middle of the rally. The market receives a large volume liquidity test against the ongoing uptrend. A sharp correction follows, yet buyers successfully absorb the pressure and maintain control. This is an important example of why a discharge should not be viewed as an automatic reversal signal. It simply marks the fact that a liquidity test has occurred. The market's response to that test determines the outcome. In this case, the market confirmed its ability to continue higher. The sequence concludes with blue traps appearing on both sides. After the initial liquidity test, the market receives a much larger wave of volume. A sharp correction follows, and signs of local participant disagreement begin to emerge. Aggressive attempts to move price appear from both buyers and sellers. However, buyers retain control, allowing the uptrend to continue. This example highlights the difference between liquidity testing and a traditional reversal signal. Pythia identifies moments when liquidity is being tested and shows how the market responds to those tests. It is that response that helps determine whether a trend remains healthy or begins gradually losing stability long before a classical divergence becomes visible. If you found this analysis useful, please leave a like and subscribe to the channel. Our goal is not simply to explain what already happened. We try to identify changes in market behavior before they become obvious through price alone. On this channel, we regularly publish real-time market reviews, educational content, and practical examples showing how liquidity test, market structure, divergences, and trend stability develop in live conditions. If you would like to go deeper, you can also subscribe to the full Pythia package. It includes all Pythia indicators together with an AI-powered analysis bot. The bot combines technical analysis, market context, and fundamental drivers to help identify important changes in market conditions and highlight key events worth monitoring in the days ahead. Thank you for watching, and we'll see you in the next analysis.